Good afternoon, everybody, and we'll call this hearing to order. And I want to thank our witnesses for being here today, and I look forward to everybody's testimony. This week, as small business owners across the country are filing their taxes, we consider the tax burden that's on them. According to the National Federation of Independent Businesses, federal taxes consistently rank among the top 5 problems that small business owners face. And as the Small Business Administration study found that it costs small and medium-sized businesses 36% more per employee to comply with the regulations than larger businesses. Small businesses owners face other obstacles too, and many will be hit with new taxes and tax increases in the health care law, such as the increase in the Medicare payroll tax and an unprecedented Medicare tax on non-payroll income. And if the 2001 and 2003 tax policies are not extended, many small business owners may see their tax bills increase. Already facing rising energy costs and scarce capital, they don't need tax increases in a struggling economy also. We should be fostering an environment where people are rewarded for investment, and that's why we encourage investment in entrepreneurship. But if we're going to penalize those investments by raising taxes on them, then our small businesses will find it even more difficult to access capital. I agree with Ways and Means Committee Chairman Dave Camp that we need comprehensive tax reform. In the meantime, we must do all we can to create an environment in which small businesses can thrive. And again, I want to thank all of our witnesses for being here and for your participation. Some of you have come a long ways. And I now yield to Ranking Member Glasgow.
Thank you. Thank you, Mr. Chairman. And welcome, everyone. In recent months, our economy has shown steady signs of recovery. In the last quarter of 2011, gross domestic product grew at an annual rate of 3%. Consumer spending is on the rebound, increasing by the most in 7 months in February, despite stagnant wages and rising gas prices. Most importantly, the U.S. economy is adding jobs, 245,000 a month between December and February. While this news is promising, the recovery remains fragile, making it vital that our tax policy promotes small business job growth and does not hinder it. Now more than ever, small firms need stability and incentives to grow. But after filing taxes yesterday, the challenges created by the current tax code and the uncertainties that lie ahead are on the minds of every small business owner. Tax law has been used to encourage business investment through the use of deductions, credits, and favorable tax rates. Yet, as this committee is well aware, it has become riddled with unnecessary complexities which have created additional burden on small firms. With many expiration dates looming and ACA tax provisions going into effect in the coming years, these complications are compounded for millions of firms. In that vein, it is my hope that today's hearing will offer insights on both current and future tax obstacles, while also generating potential solutions. In doing so, we will seek ways to ensure effective tax efforts are maintained and ineffective ones are either allowed to expire or modified to encourage growth and competition. Failure to take any action, however, could create greater uncertainty in the marketplace and dampen the recovery for small businesses. At a time when the economy is starting to exhibit sustained job creation, small firms cannot have new obstacle to expansion. Tax policies can disadvantage small businesses as they seek to compete both domestically and abroad. Small firms now spend up to 67% more on tax compliance than their corporate competitors and face constant changes to the tax code, creating further confusion and hindering job creation. A fairer and simpler tax code can encourage entrepreneurship, promote investment, and yield hiring. After all, as we look at policies to promote growth, tax reform should be a top priority. Given that the last major reform of the code took place in 1986, it is clear changes are long overdue and that we cannot go forward without input from small business owners and entrepreneurs. Yet comprehensive tax reform poses its own challenges. However, many discussions have focused on a corporate-only approach, which disregards the importance of individual tax rates. Devoting reform efforts on a complete overhaul of the code supports our nation's job creators by allowing them to continue hiring and expanding without worrying about tax increases. Comprehensive reform will have immediate benefits for small businesses while also serving our nation's economic objectives of promoting job growth policies. With that, I look forward to today's testimony and thank the witnesses for your participation. Thank you, Mr. Chairman.
Thank you. And we're going to have, unfortunately, it looks like we're going to have a series of votes that are coming up within the half hour. So what we'll do is at that point in time, we'll recess and go vote, and then we'll come back. I apologize for that. Ms. Velasquez and I don't get to make a schedule, and if we did, we would do it a little bit different, unfortunately. But we're going to start out with our first witness, and each have 5 minutes, and please try to adhere to that if you possibly can. But our first witness is Aparna Mather, a resident scholar with the Economic Policy Study Team at the American Enterprise Institute here in Washington, D.C. Dr. Mather specializes in microeconomics, international finance, and econometrics. Her work has been cited in the Wall Street Journal, the Financial Times, and the Economist. She received her Ph.D. in economics from the University of Maryland. And welcome, Dr. Mather. Appreciate you being here.
Thank you for having me. Chairman Graves, Ranking Member Velasquez, and members of the committee, I'm honored to be invited to testify on the topic of small businesses and tax policy. This testimony documents the impact of new and higher tax rates and policy uncertainty on entrepreneurs and small businesses. Research suggests that young small businesses are the biggest job creators. According to the Census Bureau, small firms account for about half of all private sector employment and represent more than 99% of all employer firms. Moreover, they pay approximately 43% of all private wages and salaries. However, in the current recession, small business hiring, investment, and employment is down. The startup rate has fallen to levels below that in the 1990s, and the startups being created are smaller than they were at that time. In other words, they are creating fewer jobs. Hence, this recession has been particularly bad for small employer firms. Future tax increases and new taxes are likely to make the business environment even tougher for small businesses. In his budget proposal for 2013, President Obama has proposed raising the top marginal income tax rates on individuals earning more than $200,000 and couples earning more than $250,000. A 2011 report from the Department of Treasury shows that approximately 4% of all small businesses face the two top rates of 33% and 35%. But this accounts for nearly 32% of small business income. For employer businesses in particular, within small businesses, 10% of business owners and 38% of business income was subject to the high marginal rates of 33% and 35%. Hence, the tax increases are likely to affect a large share of small business income, particularly for employer firms. In addition, the Affordable Care Act will impose new taxes on small business earnings. The Medicare payroll tax for self-employment earnings in excess of $250,000 will rise from 2.9% to 3.8%. The Affordable Care Act also imposes a 3.8 percentage point hospital insurance tax on investment income over $250,000 starting in 2013. In addition, there are excise tax increases on businesses that fail to provide qualifying health insurance and another tax of 2.5% of gross incomes if self-employed people fail to buy qualifying health insurance. How will these tax increases affect small businesses? Economic research suggests that raising taxes on small firms has a significant negative impact on business activity. Higher taxes lower the ability of small firms to hire workers. It also lowers their ability to make wage payments to these workers. Further, an increase in marginal tax rates reduces the gross receipts of these businesses, reduces the proportion of entrepreneurs who make new capital investments, and decreases the average level of these capital investments. These effects are more pronounced for high-income small businesses, which are the job creators. A paper co-authored by Glenn Hubbard of Columbia University also found that increasing the progressivity of the tax code by raising the top marginal rates discourages entrepreneurs from starting new businesses. Finally, all the talk about future tax hikes and new regulations has created a climate of uncertainty for small businesses, which makes it hard for them to make long-term decisions about hiring and investment. New research shows that an increase in policy uncertainty, such as about taxes or government spending or other policy matters, leads to large and persistent declines in aggregate outcomes, such as declines in real GDP, private investment, and aggregate employment. A recent Gallup poll and also a Chamber of Commerce survey found that more than 48% of small businesses are not hiring because of the potential costs of healthcare, and more than 46% are not hiring because of concerns over government regulations. The above evidence clearly suggests that the proposal to raise taxes on high-income entrepreneurs is exactly the wrong policy prescription for this time. To encourage job creation and wage growth, we need a future with lower taxes, not higher. Thank you.
Thank you, Dr. Mather. Our next witness is Leonard Steinberg, principal of Steinberg Enterprises, LLC in West Windsor, New Jersey. He's a federally licensed enroll agent and certified management consultant. His tax practice specializes in comprehensive tax services for small businesses, including tax preparation, planning, and problem solving. So welcome, Mr. Steinberg. We appreciate you being here.
Thank you very much. Chairman Graves, Ranking Member Velazquez, and members of the House Committee on Small Business. Thank you for the invitation to participate in today's hearing to examine the significant impact our tax system is having and will have on small businesses and individuals with regard to the Affordable Care Act, the expiration of the Bush administration tax cuts, the complexity in the tax system, and the issues affecting compliance. As a practitioner, I am responsible for the consequences of all the laws that Congress passes in helping my clients fulfill their obligations in filing their taxes. I am a member of the New Jersey IRS Practitioner Liaison Committee, representing over 200 enrolled agents in the state and all of our respective clients. Since 2005, I have also represented the Small Business and Entrepreneurship Council as a member of the Small Business Advisory Committee to the Financial Accounting and Standards Board, also known as FASB. And from 2001 through 2004, I was a member of the Taxpayer Advocacy Panel and chair of the Small Business Self-Employed Payroll Tax Committee. The issues of complexity have been outlined in my written testimony, and due to the time factor, a lot of this will now be part of the written record. But the tax complexity deals with many, many issues, some of which I outlined regarding depreciation, Section 179, which allows a write-off of approximately $500,000 in expenses. And here again, if it is due to be repealed and go back to a much lower rate, which in effect becomes an automatic tax increase. I am also a member of the FASB Small Business Advisory Committee, and we have the issue of the International Financial Reporting System that is currently being considered. Under the IFRS structure, small businesses would not be allowed to use the last-in, first-out method of inventory valuation. The only method that is available under IFRS is FIFO, first-in, first-out. That, too, would be an automatic huge tax increase because of the reserves that would be automatically taxable during the first year. The complexity of the tax law also affects employers at the state level. And while this committee is involved with federal issues only, many, if not most states, follow the federal rules and regulations, which all add to the cost of doing business. Many business clients have stated that the tax code is so complex and cumbersome and filled with so-called loopholes or special circumstances which make it inherently unfair. Business people sign the returns stating they are correct, but they really don't know what they are signing. Many have no idea what the accountants are actually doing, but pay them and the lawyers plenty of money to properly comply and find ways to reduce the tax burden. It seems that those with more money or more political influence can get more tax breaks. As an example, in 2010, Congress made 579 changes to the tax code, which now numbers 3.8 million words, and it's been written up in the press that it's now 4 times the length of William Shakespeare's works. Nina Olson, the National Taxpayer Advocate, has testified before Congress and written in her annual report that the tax code has gotten too complex for reasonable people and even trained professionals to understand, including members of the IRS. The tax courts have ruled that IRS publications are not authoritative sources. In our representation work, we must use IRS revenue rulings, procedures, tax law, and other cases to boost our representation for our clients. This uncertainty and all of the other complexity takes money out of the workers' pockets, reduces job creation, and will lead to a decline in the overall economy, since there will be fewer dollars available for disposable income and less risk-taking overall. I would like to conclude by saying that every large business started as a small business. It is the dream of every small business owner to become the next large business. When money is taken out of the economy, it also affects charitable giving. Many small businesses support local causes which are adversely affected by any decrease in the financial support that they would receive. And let the example of the Reagan-era tax overhaul be a guide for future discussions. When the tax code was simplified in 1986, I apologize, the result was the longest continuous period of economic boom in this country's history, and more jobs were created than at any other time. The members of this important committee have the influence in their respective congressional districts, their state delegations, and with fellow congressional members to significantly impact and reignite the most successful economic engine in the free world, that is, the U.S. small business community. I respectfully request that you make the necessary changes for the future economic growth of our great nation and as part of your public service legacy. Thank you.
Thank you, Mr. Steinberg. We're going to recess for, we've got 3 votes, and we're going to recess. It won't be too long, and then we'll come back, and we'll start with you, Ms. Stortman. But with that, we will stand in recess until right after the last vote.
5 minutes.
Thanks, everybody, for bearing with us on the vote series. And now turn to Ranking Member Velazquez for introduction.
Thank you, Mr. Chairman. It's my pleasure to introduce Ms. Margot Dorfman. Ms. Dorfman is the founder and CEO of the U.S. Women's Chamber of Commerce. The Women's Chamber of Commerce represents 500,000 members, 3/4 of whom are small business owners and federal contractors. Through her leadership, this organization has championed opportunities to increase women business, career, and leadership advancement. Additionally, Ms. Dorfman has extensive background in business, including over 10 years in executive positions with General Mills and other Fortune 500 firms. Welcome.
Ranking Member Velazquez, Chairman Graves, and Small Business Committee members, thank you very much for the opportunity to speak today on behalf of the U.S. Women's Chamber of Commerce's 500,000 members, 3/4 of whom are American small business owners, regarding the tax outlook for small business. In preparation for today's hearing, I listened to the views of our many small business members, and I can tell you there is a great deal of frustration among small business owners surrounding small and individual tax policies, revenues lost, and compliance. This frustration centers around a few broad issues: complexity, constant change and uncertainty, the costs associated with managing the ever-growing and changing complexity, the lack of fairness and resulting anti-competitive outcomes, and the challenge in simply being a good employer and provider for one's family and community. Already in today's hearing, we have heard a bountiful number of references to the growing complexity of the U.S. tax code and how these changes have a great impact not only on business tax policies, but also on individual taxes due to the high number of small businesses that are structured as pass-through entities. The outcome of these challenges has been magnified by the recession. While large businesses employ armies of accountants, attorneys, and complex tax evasion strategies to avoid paying their fair share of taxes, Congress continues to pass press release-ready legislation instead of taking the action needed to truly level the playing field to invigorate America's Main Street businesses. Our small business members tell me the endless and unrelenting lack of fairness and changing landscape of business and individual taxation takes away from their focus on the things that matter to them: securing and keeping good employees, increasing business competitiveness and profitability, and investing in future business growth. Our small business members who are active as Federal contractors tell us they are doubly burdened, as they must also deal with the complexities of the FAR, the EPA regulations, and state and local issues. It is not feasible or affordable for small business to employ someone to deal with the spiraling complexity Congress has created. When our small business members see how the tax system is skewed against them and how big business gets away with schemes to avoid taxes when, as a small business, they cannot even access nor use many of the supposedly targeted tax breaks for small businesses, they become outraged. And worse, the unfair tax advantage big businesses have over small businesses decreases small business competitiveness as well as their ability to hire and retain employees and to provide good benefits. We hear endless stories of how tax breaks cannot be used by our small businesses because of some feature or restriction that renders it impossible for many small businesses to comply with. Yet, congressional leaders still manage to find a nice headline proclaiming their love and concern for small business. For example, tax breaks for investments in equipment are nice as long as your firm needs equipment and has the cash flow up front to invest. As most of the smaller financially challenged firms don't have cash flows available, they find this approach simply emboldens their larger competitors while discriminating against them. Additionally, an overwhelming majority of small business members told us they very much want to provide health insurance for their employees and take advantage of incentive tax credits. Small business owners are close to their employees who are their neighbors and often their family members. Many of our members told us they believe as the provisions of the Affordable Care Act continue to be implemented that they will be better able to provide health care for their employees and to be better competitors when seeking to secure and retain employees. I call upon Congress to end the piecemeal approach you have taken to tax policy and to end the grossly unfair tax provisions and loopholes that can only be employed by larger firms. Small business owners want to pay their fair share of taxes, and they understand the need of the U.S. government to raise revenues to provide a quality and secure environment for businesses and families. But today we do not have a level playing field. More legislation aimed at grabbing headlines won't help. What will help is real leadership in Congress, leaders who come together to truly work on behalf of small businesses. We know that small businesses are the job creators. It is imperative that we simplify tax policy and the complex codes and skewed policies that benefit big business and allow business owners to focus on the important work they have as revenue generators, job creators, and community leaders. Thank you.
Thank you, Ms. Dorfman. Our final witness is Martin J. Mitchell, who's the Vice CEO of Mitchell and Best Home Builders in Rockville, Maryland, where he works with his father and 3 siblings. In 2011, Mr. Mitchell was president of the Maryland National Capital Building Industry Association and received his MBA from the University of Maryland and is testifying on behalf of the National Association of Home Builders. Thanks for being here, Mr. Mitchell.
Thank you for having me. Chairman Graves, Ranking Member Velazquez, members of the committee, thank you for the opportunity to testify today. My home building company, Mitchell & Best, is a family-owned company and has been in operation for 37 years. After a very tough 5 years of the worst housing market downturn in our lifetimes, in 2012 we expect to build 25 homes, thereby creating at least 75 full-time jobs. We used to build close to 100 homes per year. Small businesses are the heart of the residential construction sector. In 2010, nearly 80% of the NAHB builder members had less than 10 employees. About half had less than $1 million in gross revenues. 3/4 built 10 or fewer homes. And 80% of home builders are organized as pass-throughs, S corporations and LLCs. As pass-through entities, home builders and other small businesses report and pay taxes at the individual rate. For this reason, NAHB strongly supports extending the 2001-2003 income tax cuts, now scheduled to expire at the end of this year. In addition to the marginal rate cuts, it is important that the 15% rate on capital gains and dividends also be extended. As many home building companies are family-owned like mine, the present law on the estate tax rate rules must also be extended, or ideally the tax itself eliminated. Another bane for small businesses organized as pass-through entities is the alternative minimum tax. The AMT complicates business planning and has grown from a tax that affected a few taxpayers to one that could hit more than 30 million taxpayers this year absent a congressional fix. Also, next year, several new taxes will come into force that will negatively affect small businesses. One stemming from the 2010 health care reform legislation is a 3.8% tax on certain capital gains that will have a harmful effect on multifamily apartment developers. Further, there is a pervasive rumor that this new 3.8% tax will take the form of a sales tax on homes. This incorrect information, which NAHB is fighting via educational efforts, is having a chilling effect in some housing markets. Ultimately, a complicated Federal tax system is a burden and a hindrance on small businesses, traditionally the job creators. For this reason, NAHB supports simplifying the tax code as part of a deliberative and thoughtful, comprehensive reform effort. Such an effort should include a public process that examines necessary changes, studies transition rules, and considers economic impacts. For home builders, homeowners, and prospective home buyers, a critical element of the tax code is the mortgage interest deduction, the MID. The MID has been a part of the tax system since 1913 and helps facilitate home ownership. Its beneficiaries are primarily the middle class, and in particular younger home buyers who in the early years of a mortgage are primarily paying interest. Weakening or eliminating the MID today would be economically disastrous. It is also worth noting that any tax reform effort that would lower corporate rates but leave individual rates the same or even higher would have a negative impact on small businesses. Homebuilders also face a number of other tax issues, including business debt mitigation and the phantom income tax. What is hopefully clear from my testimony is how uncertain the current tax environment is for businesses. The current uncertainty in tax policy makes it difficult for businesses to plan for years ahead, which may further stall economic growth. And in my industry, we cannot afford further stalled growth. Home building has led the economy out of almost every recession. Housing provides the momentum behind an economic recovery because the home building industry employs such a wide range of workers. Housing is a key engine of job growth. It is also a key component of consumer confidence. And in terms of jobs, if we were at normal production levels for the housing industry, 3 million more people would be employed at this point in time. As Congress moves forward on the consideration of tax issues, home builders want to be a constructive partner with you in creating a better tax code. I thank you for the opportunity to testify today and look forward to your questions.
Thank you, Mr. Mitchell. Mr. Mitchell's testimony expressing concern about the pending tax increases is echoed by many small business owners across the country, and they're making their views very well known on the Small Business Committee's website portal. It's called Small Business Open Mic, and I'd ask that unanimous consent that these comments be admitted as part of today's hearing record. And without objection, that's so ordered. We're going to start questions with Mr. West.
Thank you, Mr. Chairman, also ranking member, and thanks to each and every one of the members of the panel for being here. You know, we just came off of 2 weeks being back in our districts, and again, the recurring theme when you go out and you talk to everyone, the 3 top issues: access to capital, regulatory environment, and tax policy. And as you know, we just passed a budget out of the House here that said we would look at personal income tax rate, condensing those 6 tax brackets down to 2, 25% and 10%. And of course, the Ways and Means Committee will look at that cut line. But my question to you, because as you know, if we're talking about lowering tax rates, that means we have to get rid of deductions and eliminate loopholes and things of that nature. And for subchapter S, LLCs, using the personal income tax rate, my question to you then, if we take it down to 25% or maybe 22, 23%, what are the 3 deductions that you see still need to be retained for small business owners and for that personal income tax rate? You want me to play the Jeopardy music? Toot, 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 toot. Okay.
Under the misconception that deduction is a dollar for dollar. The other aspect, which I personally take umbrage with, is the term loophole. Congress passes the laws. There are no loopholes. Everything is in law. What a loophole is the unintended consequences of the law that gets passed. So if you want loopholes, there are plenty of unintended consequences that are built into the tax code that I and my fellow practitioners really have to deal with on a year-to-year basis every time Congress passes new tax codes or updates the tax code. And as people say, when they say to me, well, if you go to a flat tax, won't it put the accountants out of business? And my answer to that is every time Congress passes a tax act, it should be subtitled the Accountants Full Employment Act for that particular reason, because we then have to implement and make sure all of these aspects are enforced. So as far as the three, I would leave the charitable donations. I understand the issue of mortgage interest. I also understand the issue of real estate taxes, which is really a State issue as well as a Federal issue. And of course, that's where the States and the Federal Government go back and forth. Those are the three that I would definitely keep.
Anyone else on them?
I would have to echo the keeping of the mortgage interest deduction. Right now, that is critical to keeping the home building industry going. We would see a devastating effect, as I indicated in my testimony, and that there's been a lot of misperceptions about the mortgage interest deduction and who gets the advantages to that deduction. But housing production would fall off significantly. But what you also find is that not only do we create 3 jobs for every house that's built, there's tens of thousands of dollars that go back into the local community, the State, and the Federal Government from the taxes and impact fees that are created for every home that's built. So the more we can incentivize home ownership to a reasonable level and a sustainable level, we think that's appropriate.
Anyone else? Because I only got 2.
I'll have to defer to my accountant.
Well, last question then. Do we really need to have the death tax? Especially when we consider the fact that we're about to take it from 35% up to 55%, and we're about to bring that minimum qualifying amount from $5 million down to $1 million. Is this something that will absolutely crush the small businesses? And if we look into the future, 3, 5, further down the road, do we really need to have a death tax when it comes to small businesses?
As a practitioner, and I don't mean to monopolize the conversation, but this is what I do for a living. As a practitioner, the inheritance tax, that money's already been taxed twice. It's been taxed once as income, and it's been taxed also on the dividends and interest that result from the investment of that. Now you're going to pass that burden on to the next generation, and there are tax avoidance schemes that are looked at all the time to try and avoid paying the estate tax. It's interesting that you bring that up at this point in time, because I'm working on an estate right now where the estate, the owner had passed away, and his wife now may have to sell the house in order to pay the estate taxes. Where is she going to live? What is she going to do? She's 65 years old. She can't work. She doesn't have any means of employment. She was going to use the assets from her inheritance to be able to live comfortably for the remainder of her life. You tax that, where is she going to go? Where is she going to live? So as far as the estate tax is concerned, I think it's confiscatory, and I think it serves a negative purpose regarding the amount of money that is generated to the government.
So that's a no. Yes or no?
I think it should be, done away with. I think there are a lot of, there's a lot of research showing that a lot of businesses would be affected negatively by the tax.
Ms. Dorfman?
And even looking, I believe there was the challenge originally with the farmers and the land that they inherited as it was passed down to the generations, and a family farm having to be sold. It's a small business, so.
Yes or no?
So I forget how you crafted the question, but
Should the death tax be, maintained, or should we?
no death tax. That's the way to say it.
We agree it should be eliminated.
Thank you, Mr. Chairman. I yield back.
How do you balance that with deficit reduction and balancing the budget? Mr. Steinberg.
Okay, thank you. I appreciate the opportunity. Well, one of the ways to do is Congress doesn't have an income problem. Congress has got a spending problem.
A revenue problem.
No, it's not a revenue problem. There's enough revenue coming in. What I suggest is that if Congress really wants to get the act in order, why don't you make a recommendation that every Federal agency cut their budget by 1%? You will have more than enough money to offset all of these tax issues.
Dr. Mathur, the Ryan budget includes extending the Bush-era tax rate cuts, reducing corporate tax rate, and moving to only 2 tax brackets. Yet, in order to ensure the estimated $10 trillion in cuts are paid for, many popular tax expenditures must be completely eliminated, possibly having a disproportionate impact on small firms. The Ryan budget did not include any details on what expenditures should be cut. Since we're talking about ways to stimulate the economy and control deficits without burdening small firms and the middle class, can you please give us specific credits or deductions that will make up the trillions in tax cuts without imposing such burdens on small businesses?
I think the assumption that just reducing corporate income taxes or reducing personal income taxes will actually lead to long-term deficits is wrong. I think there is a lot of, the research suggests that if you actually cut corporate income taxes or you cut personal income taxes, you could actually see higher taxable incomes being reported. You could actually see more corporate tax revenues coming into the system.
Let's say that it doesn't happen the way that you're describing it. Can you give me specific tax credits that could be, or deductions that will make up for the trillions of dollars in tax cuts without burdening small businesses?
I think we'll have to go through the list. I'm not sure, which ones are actually working or not.
Thank you. Mr. Mitchell, in your written testimony, you spoke about the Recovery Act tax change that not only helped your business, but made the system a little fairer to small firms with debt. Can you please elaborate a little more on the debt exclusion from the stimulus bill and where your business will be today if that exclusion had not been enacted into law?
Yes, I'd be happy to. Under the Stimulus Act, there was a deferral policy where if you had forgiveness of debt, cancellation of debt that created phantom income, you could defer that out to a period of up to 10 years. Unfortunately, in an industry such as we're in, we turn our product over. We're not like an apartment builder where we hold an asset for a long period of time. So even though that was beneficial and it allowed us to defer, it really only created a deferral for maybe a year or two, because once you sell the underlying asset that was a part of that debt, you then have to take that phantom income tax. It has helped us to move things forward for another year or two, but we had situations where Weyerhaeuser Realty Investors was our largest mezzanine debt holder. They closed down that operation. The value of land dropped significantly, and we have tens of millions of dollars of COD, which is phantom income. It could be devastating to us if there is not an adjustment made to that, and we ask Congress to take a serious look at that.
So you're telling me that what you're describing is how one targeted provision in the tax code could be beneficial to a small business.
I believe it can be for those businesses that saw, reductions in the value of their assets over the last 5 or 6 years during this downturn.
Thank you. Thank you, Mr. Chairman.
Mr. Schilling?
Thank you, Chairman. I'd like to thank the panel for being here today. I am a small business owner. I have a pizzeria in Moline, Illinois. And, the one thing that I understand is that our business is down. We're off about 35%, and the gas prices continue to just crush our business. And a lot of the business folks that I've spoken with recently are very concerned about the Bush-Obama tax cuts expiring, because as this downturn economy is here, and then now they take on another hit with a 35%, or, most of the folks I talk to are anywhere from 20 to 40% off. Once those expire, basically what's going to happen is it's going to put a lot of these companies out of business. And I think it's really, really imperative to understand, I believe, is that, we have to stop spending money that we don't have. And that's the thing, because as we continue to spend it, we're $16 trillion in debt. It's a huge burden on our kids and our grandkids. And, once we stop the ridiculous spending, the tunnels for turtles and all of the other things that we've been doing for years, then we can look at revenue increases. But until then, we've got to really stay focused in on that type of stuff. What I'd like to do is just, Mr. Steinberg and Mr. Mitchell, the new health care law creates much uncertainty for our small businesses through mandates, regulations, and tax increases that don't take effect until 2014. One specific tax, the small business health insurance tax, will increase premiums by 2.5% in the year 2016 alone. According to the Joint Committee on Taxation, is what they're telling us. Do you think that this tax increase will make it more difficult for employers to provide health care, which is the overall goal of the President's health care law, after all, and then predict health insurance costs in the future by giving us that increase? Just a kind of a basic.
Well, from our aspect, despite maybe what's thought about in the public, we're now operating at razor-thin margins if we are on the black side of the ledger at this point in time. So any type of an increase, even at 2.5%, which may not sound like a significant amount, but on your employee base, it will be a significant burden. So right now, it will be difficult for us. We're an industry that has been hit with several code changes in the last 10 years, significant ones that have changed our cost structure. But any additional cost item that's placed on us, such as that, will make it difficult for us to continue and survive.
There are consequences to having that tax passed, and number one would be whether the IRS has the resources to be able to enforce it. Right now, the IRS is operating razor-thin as it is with their budget. They don't have the resources to enforce the current tax law. How are they going to have the resources to enforce additional mandates that are being passed through the Affordable Care Act? And the other aspect is that you're really taking money out of the owner's pockets. So, and I happen to know Ms. Velasquez's district. I grew up in Brooklyn. So I know, and in Queens, and I know the area. Sunnyside Avenue, you've got bodegas, you've got laundromats, you've got hair salons. You raise the amount of tax that they're going to pay, those small businesses are not going to be able to employ the local people. So how are they going to stay in business if you take more money from them?
I don't think they're making over $250,000.
That's not the issue. But that's not the issue, Congresswoman. The issue is you're taking money away from them that they cannot give to hire somebody else. Or let's say a young high school student wants to come in for a job after school and is looking for a job. And they want to be able to give them a job to be able to do it. If they don't have the money, that high school kid, I worked high school jobs after high school. They want to be able to work. If they don't have the money, what's a high school kid supposed to do? Where are they going to get the experience and learn how to do it if the money is being taken out of the economy and being sent to Washington? There's a disconnect there between what's happening in Washington and what's happening on Sunnyside Avenue.
I totally disagree with you.
I respectfully accept that.
Can I reclaim my time?
Yeah.
You guys can do this later. Just one quickly, Mr. Steinberg and Mr. Martin, because you guys have experience in this. How much would you say your company or members spend preparing and comply with the tax code or the regulations each and every year? Because I see this as money that we could be expanding and hiring people. But can you give me a ballpark of some of your clients and then maybe what your business does in complying?
The average tax return for an S corporation for me takes about 3 hours. That's just doing the tax return. That's not doing all the due diligence behind it. So when you factor in all of the work behind it, you're looking at approximately 6 to 10 hours worth of work before the tax return is completed.
So basically, you're able to hire another worker to do all of this extra work, right?
But then I have to pass that cost on to the client.
That's right. Okay.
So the client, in effect, is paying for compliance one way or the other. So therefore, I'm taking more money out of the client's pocket, rather than having the client be able to put that money back into the business.
Very good. Thank you.
From our standpoint, we have never been a large enough firm to be required to do audited financial statements, so we've always done different levels below that. The complexity of our tax returns in our type of business, going back from the downturn of the early 90s, is that we basically have to put every project into a separate LLC, and then we have to compile those up and roll those up to one LLC. As a business that is not operating profitably for the last couple of years, we're still having to put out $30,000 to $40,000 a year to have our tax returns done. That is not our financial statements. We have our financial statements done internally. We get some input and feedback from our accountants, but we don't have them do that. That does make it even more difficult to obtain equity and obtain debt, but it's just one of those things we have to look at every penny that we're spending these days. But it's a significant number for a firm like us.
Very good. I thank you for your time. I yield back.
Mr. Schrader.
Thank you, Mr. Chairman. Dr. Mather, data I've seen would indicate that our tax revenues, federal tax revenues, are pretty much an all-time low since World War II. Would you agree to that at this?
Yes.
So how would you describe the state of our economy right now with our revenues, tax revenues at an all-time low? Taxing of businesses is, the lowest point it's ever been. And
I don't agree with that. The taxing of businesses is at its lowest point it's ever been. I think
Since World
if you
War
look at the corporate tax rate, we have one of the highest corporate tax rates now amongst the
Well, with
entire
LLC,
industrialized
most
world.
your small business folks, as I understood, we're talking
A
about
lot of small
LLCs.
business folks will also face high tax rates of 33 and 35%.
But you just testified a moment ago that the federal revenue is an all-time low. Our taxes,
revenues are low.
Taxes, Let me finish
Exactly.
my comment, please.
Sure.
I'll ask you a question. You can answer. Okay.
Okay.
So what I'm saying here is that our revenues are an all-time low. Our taxes are at an all-time low overall. I'll grant you a point. It depends on what business you're in or what part of the world you come from, but at an all-time low. If taxes alone determine the health of our economy, we should be booming right now, and we are not booming. So while I share everyone's concern on tax policy, I think it's completely inaccurate and hyperbolic to say that low taxes equals great economy. We are not seeing that right now in the United States of America. Second point, Mr. Steinberg, you're absolutely ill-informed on the Affordable Care Act. Congresswoman Velasquez is absolutely correct. The revenues in that bill are for larger businesses. Businesses 50 employees or under are completely exempt. Those are truly the small. I'm a veterinarian. I'm like Representative Schilling. I got a small business, and I'm very appreciative of the fact that that's recognized in the Affordable Care Act. Health care right now is totally unaffordable. As we've heard testified here today, the effects of that act don't occur until 2014, and already businesses are shedding their health care plans. So the system now is broken. We have to do something. And I respect the fact that the bill is imperfect. Every bill we pass is probably imperfect, and we've got a long way to go. But I would suggest respectfully we don't throw the baby out with the bathwater. My question, Mr. Chairman, sir, to the panel, you've all testified, at least all agreed, I think, that our tax code is too complex, and that comprehensive tax reform is probably a good idea. There are several proposals out there. Congressman Ryan has given an attempt at that, and I appreciate that, actually. There's another one out there that the President put together through his Debt Commission, sometimes commonly called the Simpson-Bowles Report. And there's been a recognition that certain deductions are very, very important. They call out the primary interest deduction through the Gang of Six work. They talk about the charitable deduction that Mr. Steinberg talked about. The real world is, for every deduction we save, and the primary interest, I'm a big one to save that, primary interest mortgage deduction, that's a big cost. That's one of the bigger deductions we have. And that will affect how much we can lower the rate going forward. But I guess I'd just like a general from each of you. Do you think that the Simpson-Bowles framework of comprehensive tax reform with certain critical tax deductions to make sure our economy, the housing industry in particular, recovers is maybe a decent template, at least for this Congress to work off of? There were 38 members of Congress that agreed to that. I'm curious where you all stand.
Well, I have to admit, I don't know all the details of the Simpson-Bowles, but we are supportive of a reform of the tax code and supportive of the simplification, as you talked about. And we think that it was mentioned here earlier, if you go back to 1986 when some of the reforms were made, there were certain protections for important items such as the mortgage interest deduction and other housing items. But there were other housing changes that made severe impacts that were negative to the housing industry. So I think that, while we support, the overall goals, I can't get into the details. I apologize. I can go back and talk about that.
Ms. Dorman.
I would have to say I'm not familiar with all the details either, but our members definitely would like to have a simplified code. We also think that the unfair tax advantages that the large corporations are enjoying should be reexamined and perhaps removed so that there is a level playing field. Trying to compete as a small business when the corporations, obviously the large corporations, have that advantage, it's hard to go ahead and grow in a market space with that competitive disadvantage.
Mr. Steinberg.
Any framework that the Congress can begin to look at that is going to significantly improve the tax structure is definitely welcome. And of course, with the CBO and the other panels, the American Enterprise Institute and some of the other think tanks in the city, as they do the analysis of it, as you begin to progress, it's a start. It took us 40 to 50 years to get to this point. We're not going to solve it in 1 or 2 years. It's got to be a phased implementation. And each Congress can change it as the Congress changes every 2 years, then they can do away with what the previous Congress has done. What you need to do is you need to codify it and say this is permanent so that businesses have a way to plan. They have certain certainty. Right now, there's no certainty among the small business owners. You know that. And Mr. Schilling knows that. There's no certainty in the tax code. So once you have that certainty, if you're going to use Simpson-Bowles, that's a good framework to start. And just let the statistics tell you where it goes from year to year.
Good.
Yeah, I agree that we need tax simplification. We need a process where, if you are thinking of cutting down rates, then, we also care about effective rates. I think what matters to behavioral, when we think about actually getting revenues, that was the point I was trying to make earlier. You can have high rates, but that doesn't always translate into high revenues. I mean, we know that with the corporate tax rate. We have one of the highest rates, and we have one of the lowest revenue collections in all of the OECD countries. So we should aim for simplification, but I think we need to care about where we stand in terms of the effective rates as well.
I'm done. I actually over my time. And just, Mr. Chairman, thank you very much. I just want to say I appreciate the comments, particularly on the last question, and ask you to do a little more homework if possible and give me a little more feedback based on Simpson-Bowles Gang of Six type of changes, because it's the only bipartisan game we have in town. It's not perfect, but at least it's a starting point, I think, for finally a productive discussion that I think America is craving right now. Thank you. And I yield back, sir.
Mr. Mulvaney. Sure.
Yeah, I yield back.
Well, I want to thank you all for participating today, and I think we should all be concerned about the burden of taxation on our nation's small businesses and the effect that these pending tax increases and the fact that the administration seems to be willing to let that happen, what impact that's going to have on our economic recovery. I would ask unanimous consent that all members have 5 legislative days to submit statements and supporting materials for the record. Without objection, that is so ordered, and this hearing is adjourned.